Mahesh Patil joining us now. Mahesh, good to have you with us on a morning where we're again tottering and not really managing to hold out any gains whatsoever. Everyone is now trying to get a grasp or estimate the kind of economic impact this will have. And let's remember that we're nowhere, we possibly are nowhere even in the heights of this contagion, at least in India. We've so far been fairly protected, but all guesses are on as to how this could go.
Yeah, that's right. I think the markets have corrected in anticipation, and it's mainly led by the global fall. Okay, we've seen global markets reacting, and essentially it's the panic from global investors, which, as someone mentioned earlier, we've seen $4 billion of outflows. Domestic investors have still not panicked. We've still seen steady inflow coming in. And India, up till now, has remained untouched. Okay, we've seen some cases, but I think next couple of weeks will be crucial for India to see how the contagion spreads over here. And to that extent, I think that will determine really how our economy gets impacted in the next few quarters. But clearly, there is no doubt that the virus impact will have an impact on the economy. And globally, all the large economists are talking about recession coming in the next this quarter and next quarter. And that will clearly lead to earnings downgrades. We already seen in U.S. The earnings have been cut sharply for this calendar year. In India also, I think you will see that for this year and for next year coming in. And to a large extent, I think the market has corrected, and it's now in a zone which is looking to be fairly attractive. It's clearly in a buy zone. But we've seen that during these times of extraordinary situations, markets tend to undershoot on the downside. And that is what I think one can't rule out even from these levels.
But at a time when we're seeing the severe risk aversion and the fact that we've seen, absence of any sort of liquidity, that really suggests that the volatility is only going to persist. So what does one do then just with the current investments that they have? Do you just stay put, or is it a good time to nibble for some select mouth-watering opportunities?
Yeah, so I think the market fall has been too sharp and sudden for anybody to react. I mean, in fact, it's sharper than what we saw in 2008. And I don't think anybody would have time to really sell and raise some cash. But now that the markets have corrected by around 25% or so from its near-term peak, I think there's no point trying to now sell into this sell-off. In fact, a lot of stocks have come down to levels which are looking very attractive, especially for us as a fund house. Many good quality stocks which we always wanted to buy, but they were looking expensive. Now with the correction, we've seen this correction has been across the board now, right? Even the frontline stocks which were doing well, I think they have also corrected because mainly the selling has come from the ETFs. So it's a good opportunity to actually build a good quality portfolio of stocks which were expensive but now are available at reasonable valuation. And obviously looking at companies and sectors which will get impacted but will have a short-term impact, and there won't be any structural impact for the business. And those kind of companies, I think, will again bounce back once things normalize. And that should be the approach to buy. For investors investing into funds, I think one should start definitely investing, nibbling at this point in time with some kind of a cushion to take care if the market goes down further from these levels. So it will not be a bad idea to spread out the investments over the next couple of months.
I just want to mark future group of companies and look at the carnage in future retail. Let's start, showing some of the 1-month charts here. Future retail, future consumer, couple of future group of companies, and the fall here is unexplainable. I know they've had debt issues in the past, but this kind of an collateral damage which has happened to the stock prices is going to be a huge challenge. Mahesh, my only worry is that this kind of a fall will start impacting the way companies have done business. Fundraising will get to a standstill. Forget about Air India being sold in this kind of an environment. We don't know when BPCL would be sold. So the environment is getting murky. And now the bad news will start coming out. Right now, corporate India is in protection mode, and I think that's a great thing, Mahesh, because we are trying to keep our employees safe. But soon corporate companies will have to start admitting, indicating and sharing their views on the businesses, and that is where I can smell trouble, Mahesh.
Yeah, I would agree. In fact, you could see companies, different businesses getting impacted. It's not only corporates, even small individual, small businesses, okay, would get impacted. Even daily workers, right, okay, who are earning the daily wages, they will also get impacted because of the shutdown which could happen. And that could have impact on the economy. And you could see, I mean, the fear is that this should not lead to, if it prolongs, then it should not lead to another credit cycle, right? We've seen some stresses in corporates coming up in the mid corporates, and we were hoping that the economic recovery would take care of that. But now with this shock, and the thing, if we're already seeing some stress in some of the high leverage corporates, and the ability of these corporates to deleverage, which was kind of looking possible now with liquidity coming in, with risk coming back. That's what we were looking at. I think with this risk off, again, I think that gets pushed forward, and one should be prepared for some credit defaults down the line. And I think that is, I think, the key worry at this point in time. Obviously, if things normalize in the next couple of weeks or so, we don't see this spreading out, then I think that that danger is pushed away. But I think that's a clear risk, okay, which is there lurking around in the near term.
Okay. Are you somewhere not satisfied with the government response or the Indian government response or the regulator response to the crisis? Every government has announced a stimulus package. They are taking this approach of, we will do whatever it takes to fix the problem. Yet we've not heard anything from the Indian government which could be consoling or which could be, talked about, which could be considered as like a stringent stimulus measure.
Yeah, so these kind of situations demand for a quick action response by the government, fiscal as well as monetary, as one would have a lot of the other central banks and the governments are doing at this point in time. And we've seen that earlier, in the earlier crisis also. I think if you're quick to respond, okay, and provide, I think you can, to some extent, contain the cascading effect. And let's hope that the government, I think they've mentioned that they are watching the situation very closely. And if need be, they can, one need not wait for the monetary policy meeting, but they can have an MPC meeting early and announce measures, okay, to tackle the situation. They have taken some measures, but clearly they are not as large, okay, in terms of trying to give support to the market or to the economy. So I think we remain hopeful that the government will do something, and taking cues from what other governments are doing in Europe, in US, in China. I think we should also follow suit soon.
Mahesh, what is it that you're experiencing? While we understand that up until last month, the SIP flows were only going up, but do you also fear that there would be redemption from mutual funds, or have we not hit the panic button just yet with retail investors?
So I think it's, up till now, the behavior of retail investors has been fairly rational. I think they have continued with their investments even in a market fall. They have actually increase the allocation, which is normally what one would advise one to do, right? As a normal asset allocation, whenever there's a sharp correction in the market, long-term investors should use that opportunity to invest, and that's what has been happening. My only worry is that now with this sharp fall, and since in the last 2-3 years also we had difficult markets, didn't really do as well, like say the US markets. So the returns for the last 3 years and 5 years are not looking very, very weak. And so retail investors who have been patient up till now, I think they could start to get a bit jittery looking at the long-term returns, and it would be really difficult for them to convince that stay put in equity because long-term returns would still be good. So I think next few months would be a challenging time in terms of trying to test investor patience, and also from our side in time trying to communicate to investors and trying to stay put, because I think this is a time clearly to stay put. I think these times will also pass, as we have seen earlier, and it's critical that investors don't panic and take out money from the market at these levels. But I think up till now we've still not seen any panic. But I think next few months will be critical, where investor behavior would be really tested.
Yeah, I bet it would. Mahesh, good to have you on the show. Thanks so much for taking the time out and speaking with us today.